Mortgage rates have had such a big factor on the commercial property sector. As we see them stabilise.
Hello, everyone, and welcome to another episode of the Rodcast. Today, we've got another property news update, and I'm really happy to be joined by none other than my new business partner and CEO of 978 Finance, Mr. Simon Dass. So, Simon, welcome.
Hi, Rod. Absolute pleasure to be here.
So, Simon, what has been going on in the news over the last few weeks? And I guess the big thing is probably lending. Tell us about that, as obviously you're involved in that market. What's been going on?
Well, obviously, I mean, the last year for lending has been pretty unprecedented since I started my brokerage in 2018. Obviously, I've seen nothing like it. And I was barely in property, by 2011, so I didn't feel the 2008 madness either. So for me, it's been a real eye opener. It's been quite a crazy year, but the last couple of months have certainly felt a lot more positive about the finance market.
Mhm.
Things are settling down. I think borrowers and lenders are getting used to the new norms, and lending is starting to get a bit more competitive overall, particularly over the last few weeks.
Yeah, we've seen sort of headlines like "battle for business" from mortgage lenders and things like that. So how I mean, talk to us about buy to lets then. What's happening in the buy to let market at the moment?
So the buy-to-let market is it's definitely improving. We saw rates shoot up over the past 12 months, and they've been coming down, I would say, for 3 or 4 months really. But the last 6 weeks or so, we've started to see rates that feel a lot more rational compared to what we're used to. So we've started to see buy-to-let lenders, even in the last few days, drop under the sort of 5% per annum mark with realistic arrangement fees. Now, there was a few 4 to 5% rates out there, but you'd see a 5 or even 10% arrangement fee on there. We've got a couple of lenders offering sub 5% with a 2% fee, or with a £1,500 fixed fee and things like that. So a much better marketplace for buy to let finance at the moment.
Oh, absolutely. And is that for limited company borrowing as well?
Limited company borrowing, you can expect to pay a little bit more, but in and around the 5.5% mark is much more realistic. Everything was six, seven
Yeah.
percent before.
And is that still
Um,
with a low fee, or are we going to get stung fee?
Generally, we might get 3% fees on there, but it's certainly getting a lot more rational. We're still seeing 5-year fixes a little bit cheaper than 2-year fixes in general. So that tells you a little bit about what the lenders are thinking. That they're expecting to see rates settle down a bit more over the next year or two.
So that's a kind of around about that 5% mark with a 3% fee for the limited company borrowing. Is that about right for a 5 year?
Yeah, I'd say broadly speaking, if you're in that range, yeah,
Okay,
you're not going to
fantastic.
be too disappointed.
Now, what about commercial? Because commercial's had a bit of a tough time recently. Where's lending for that at the moment?
Oh, it really has. People really haven't been able to trust the market. No one knows how viable commercial leases are, other than the blue chip stuff. There's so many independent businesses that are struggling, the energy prices and all these things contributing over the last few years, just general inflation, the cost of everything, wages. So it's been massively challenging, and generally we've seen rates of sort of 4 to 5% above base until the last 3 months or so. I think again rates are starting to get more competitive. We've got a few lenders looking seriously at commercial 5-year fixed term debt at sub 8%. We've just had a provisional offer on a mixed bag of light industrial and leisure at 7.4% fixed for 5 years with a 2% arrangement fee. So I'd say around about the 8% mark,
Yeah.
but if we work hard and we've got good clients and reasonable LTVs, we can get it a bit closer to 7.
And I guess it's going to depend a little bit on the use class as well, because, like you say, leisure is going to be a bit higher than, say, industrial, for example. Yeah.
Absolutely, yeah. It's so case by case with the commercial stuff. So yeah, I'd say you've got to be thinking 7 to 9% on commercial to be
Yeah.
realistic.
And that's inclusive of the of that product fee as well, or arrangement fee.
Mm.
Yeah.
Yeah, yeah, exactly.
Okay, great. And then what about bridging and development finance then? Because I've thought over the past, I don't know, year really, that although we've seen these high rates over kind of buy to lets and big fees and things, that doesn't seem to have kind of proportionally run into development and bridging. Bridging seems relatively cheap when you look at kind of the spread, the typical spread you'd expect to get over a kind of a typical residential buy to let versus a bridge or even development loan. Talk to us about what's happening with the bridging and development market or finance market at the moment.
Yeah, I'd absolutely agree. Bridging's never looked more competitive than over the last 12 months or so. Rates have increased a little bit. There were rates out there of 0.5% a month, and a lot of bridging was getting done at 0.7% a month, 0.75. Realistically, 0.8 to 1% on vanilla stuff per month with a 2% arrangement fee. And then if you're getting a little more quirky or into commercial, you might be sort of 1 to 1.25% a month on bridging. Not long ago, you were almost better off getting bridging than a commercial mortgage and sitting and waiting it out. So that sector is funded in a different way. Yes, a lot of the bigger bridging lenders have institutional funds. They have funding lines from HSBC or Metro Bank or one of the others, but they have a lot more autonomy over what they're doing. They've fixed big pools of debt for themselves for long periods of time. And so they've not had to react in the same way. And many of the smaller lenders are privately funded anyway. And their backers are happy with 6 to 10% anyway. So yeah, we've really seen bridging hold. I think it's been a bit more realistic. There were bridging loans going out at 0.5% a month, as I said, and I just think that was
Crazy when you've got sort of 6% for a buy to let. It's about the same.
yeah, it was completely unsustainable and unrealistic. And what you did find were these ridiculously cheap rates were getting offered, but then you're underwriting it in the same way that you would underwrite a term debt product because ultimately you're just using institutional funds with all those hoops to jump through. So I think it's been a little bit of a leveler in the bridging market, and I think we're seeing realistic rates, fair rates, and actually some really competitive products out there. 1% a month, 2% arrangement fee. Put a percent in on the exit just when you're evaluating deals, just to make sure you're not miles off.
Brilliant. And I guess development finance then, how's that looking? Is that similar
Well,
to
that's that again. It's been development finance. The rates haven't changed dramatically over the last year or so, but I do think the level of loans getting approved has reduced quite dramatically for a number of reasons. Developers not wanting to take the risk at the moment, not knowing where the end values or how they're going to get the sales of these properties once they're built. I think, and then lenders feeling the same way. So being more critical when underwriting, surveyors being more critical when valuing. So that has contracted the market massively, I think.
yeah.
Um, what we saw as interest rates started rising a lot, we saw a lot of development lenders switching from fixed to variable rates. A lot of developers did not like that. Some of the smaller development lenders stuck with their fixed rates and they become a lot more appealing. So even if they were generally a little bit higher, um, their rates were a bit higher before sort of the interest rate started increasing. They knew their cost of debt, they knew their returns, and they stuck with those fixed rates. So we started seeing developers go to slightly smaller lenders, and the big lenders switching to variable rates. We're still seeing a fair few variable rates out there between sort of 5 and 7.5, 8% above base.
Mhm.
And some of the development lenders I speak to have their clients asking for variable rather than fixed rates, and they're doing options as well because quite a few developers are hoping they'll see the base rate drop over the next 18 months whilst they're delivering a project and make a saving that way.
Sure, sure. And I guess that we saw kind of the inflation numbers come in earlier this week,
Yeah.
showing that the government had hit their target of halving inflation by the end of the year. Whether or not that was down to the government or energy price caps or things that other things is yet
Yeah,
to be seen.
or where they took the data from and how they packaged the figure. I'm not too sure, but
Sure.
overall it is positive. Yeah.
It's definitely positive. I mean, I think we've still got to remember that we're still like 4.6% is still over double of what the actual inflation real target is. So people thinking, oh, this is good news, rates have got to cut now. Well, prices are still growing far greater than we want them to be. So yes, it's positive, but are we going to see cuts straight away? Unlikely. Um,
Hmm.
so, what else has been happening in the news? We've got a new housing minister, our seventh new one in 21 months.
Well, well, is he new? Because wasn't he the housing minister 3 ministers ago,
He
about a
was,
year ago
well,
as well,
yeah, he
for
was. He was for about 30 days, I
for
think.
about 30
30 days.
days.
So he's got some good experience, hasn't he?
Yeah,
Yeah,
he has got some good is it Lee Rowley? Is
yeah,
that
yeah.
his name? Yeah, so uh, another housing minister, 17 since since the Conservatives got in, is it?
2013 or something. Yeah, I mean, there's
It's
all
it's
these stats to do.
unbelievable.
Basically, it's just ridiculous.
It is. There's no way that well-reasoned and sustainable policy can be delivered when you're chopping and changing housing ministers so often. You look at Lee, his background is banking. Okay, it's somewhat related, but often what the banking sector needs and what the housing sector needs are contradictory as well.
Mm.
So, they're not putting people with proper experience in place. I think his highest accolade whilst in a government role before now was a failed nighttime parking charge in his home constituency. Who are these people? Why are they chosen? How come they're getting changed every 3 months? I mean, it just doesn't make sense, and it doesn't support a good housing sector.
Well, it just shows that they're not showing this as a priority, are they? And it's a real shame because actually Rachel McLean, who is the one who's gone out, clearly didn't really want to go
Mm,
to make way of this reshuffle, which I guess we can probably blame Suella Braverman and her kind of crazy views somewhat. Um,
mm.
but I mean, it's a shame that she left because she seemed to be quite well reasoned. She was doing a lot with the Renters Reform Bill. She was moved out the day before she was meant to kind of address the government on the Renters Reform Bill. So that then had to be delayed, which is like the timing couldn't really have been worse.
No.
And so that I do think is a shame. She seemed to be quite good actually in terms of what
Yeah.
she'd managed to do. So I'm hoping that there's been a really kind of detailed handover to the incoming minister. But yeah, it's a difficult one, isn't it? It's how do you expect to get anything done? I guess I think on the last episode was recorded actually on the day that it changed over with Ian Humphreys, and he likened it to that it's like Chelsea Football Club with managers kind of changing every 2 minutes, and it's difficult to get good results when you've got kind of unsustainable or unstable, sorry, leadership.
Absolutely, it's frightening to be honest. It's just there's no reasoning to it. I mean, all it boils down to in my mind is vote winning and tactics. It doesn't make sense for the general public or the people in the sector.
You're right. So look, one of the other pieces of news is planning fees. So planning fees have gone up across the board, or will be going up on the 6th of December. So if you've got planning applications, whack them in now if you want to avoid your planning fee increasing by 25%.
Mm,
Now, to be honest, I think that's a good thing. I mean, when you ask most developers, they will be more than happy to pay a bit more um, to ensure actually speed and quality of service. Now, it's a good thing if you get that speed and quality of service. If you're just putting them up for the sake of putting them up without that, then okay, I'm a bit that is concerning. In terms
mm,
of what's happening with the planning fees, so we've got kind of £120 for discharge of planning conditions, £293 for certificate of proposed use, £578 for each dwelling house or for a material change of use if it's below 10 units, or between 10 and 50, it's 624 for each dwelling house. There's going to be no special fees for prior approval. The power of certain bodies to charge fees for advice in relation to applications under the Planning Act is going to change. And the big one that I think is all fees are to be index linked or increased by 10% or CPI from April 2025. So that's really going to start pushing up. Now, I do hope we're going to get something more for this money. I think everyone is more than happy to pay a bit more if they see results.
mm.
I'm just not completely convinced. The other thing that's changing is previously we've had this free go with planning, which basically means that any planning application that goes in benefits from this free go to submit a further application without paying a fee. Now that's going to go as well, so that's good. That's always been quite useful if the kind of town planners say, well, hold on, you put this application in, we think if you adjust it in this way or put a new application in making these changes, that's going to be relevant. So that's also going as well. So a few changes there which
Yeah.
developers will need to see. I mean, any thoughts your end of that? Is it good, bad? Is it sort of long time coming, or
I don't think planning fees have ever been the problem, the actual cost of them. I think the free go is a bit of a kicker. But ultimately, as you say, if paying a few more fees is going to get better service, then that's fine. But the planning departments have been chronically underfunding for I don't know how long. I really think this is where the government need to step in. They just need to subsidise planning departments, get the people in there paid properly, make them appealing places to work, increase capacity. I think that could have it would have a transformative effect on house building and on ultimately on those figures, those 300,000 houses a year that the Tories said they wanted to build and then sort of did away with that target, knowing that they couldn't make it. Um, that's what they need to do. They need to fund the departments properly, get them working right, and make planning reasonable and hit those timeframes so developers can schedule their builds and their projects and their pipeline properly. And that'll put so much confidence back into the market. So if this little increase in fees delivers that, wonderful news. My gut feeling is they're so far underfunded at the minute, it's not going to have enough of an impact, and they need to do something else to really radically change that.
I totally agree. Look, they've got to attract more staff, more quality staff back into the public sector, really, because if you're a town planner and suddenly, I don't know, your planning department for Wandsworth has now merged with Richmond and Merton borough, and the staff have been cut, and now your workload has tripled or doubled, and you're
Mm.
still no, I don't know, getting paid half the salary you would be at private practice.
Yeah.
What's the motivation there, really?
There's,
It's tough,
yeah,
isn't
there's
it? Yeah.
just not. There's
Um,
just not. They're trying to get the planning departments run on well wishes and, and charitable donations of time, by
exactly.
the sounds of it.
Exactly. So look, what else is going on in the property news then?
Well, unsurprisingly, we've seen mortgage applications down a lot. I think about 30% year on year. That's not surprising, is it? People are holding out waiting to see what's happening with rates. So no shock to the system. Hopefully, we'll start to see those numbers changing in the other direction.
We have
Um,
alternatively, well, not alternatively, cash buying has increased massively as well. So
mm,
transactions haven't dropped so much. I mean, they've dropped year on year, but last year they were up. So pre-pandemic wise, I think they're about 10% lower.
right.
Cash buyers have made a massive increase in terms of who's buying at the moment
Mm,
versus people on new mortgages, which I think is very interesting, isn't it? And kind of obvious as well, because if
yeah.
you've got cash, you're going to be thinking, well, my cost of capital here is a bit is worth going in as equity rather than getting on more expensive debt.
That's it, yeah. And I've been quite surprised how much cash evidently that there is out there in the property market. I didn't realize so few buy-to-let properties were actually on mortgages. I think I read somewhere that it was less than 50% of
Yeah,
buy-to-let properties were actually on mortgages, and that really surprised me. And it's frustrated me recently because I'm trying to buy a lot of property on mortgages and up against the cash buyers. It's very hard to make it stack. So, but yeah,
well,
it's
that's the big
interesting.
difference between 2008 and 1989, 1990 crash is the amount of equity that we've got in UK houses. It's
Mm,
so much more. Um, okay, so what about modern methods of construction? That's been in the news recently because that's been highlighted as something that kind of the UK really needs to get behind in terms of
mm,
build, build, build. We've got to get all these new houses. How can we do it? Modern methods of construction. So that is things like modular houses, timber frames, SIP panels, all those types of things. Um,
yeah.
that's been in the news because they're having a tough time of it at the moment. We've seen I think it was Legal and General bought a factory and then they've had to close that down, things like that. And
Mm,
what they're trying to do is get the government really behind this to get any government spending, any buildings that they're building to be done in this way to show actually, look, we can get behind this as a country. It's kind of standard in other countries.
yeah.
So why aren't we doing it? And there's an element around funding.
Yeah.
I mean, look, if you've got kind of what is it, Council of Mortgage Lenders, CML certificates on the build type, then normally it's fine to get a mortgage at the end. Development finance is different. The other thing that's key is the building firms, the actual firms constructing it. Can they
Mm,
get finance as well? And that seems to be
yeah.
a little bit of a critical thing at the moment because a lot of these factories are struggling to get finance themselves as that construction business.
Mm,
So I think it's been in the news that look, the government's really got to push behind this and get some funding to those guys, or to be saying, look, we are going to build. I want to say councils will build their houses out of modern methods of construction. Unfortunately, they're not building any bloody houses at
no.
the moment. So yeah, an interesting one. Look, so, as someone who's done a little bit of modern methods of construction in the past, I think it's fantastic. If I could build it every time I would. It's just we're not quite there on the price point. I mean, in terms of
Mm.
quality, in terms of speed, it's fantastic. Really is, I'd love to see more of it. So yeah, any thoughts on that?
Yeah, well, I think I mean, it's very capital heavy. It's sort of front heavy method of construction, isn't it? So, I mean, from a finance perspective, when people are using modern methods of construction, they tend to need to pay large deposits because the factories have to get huge amounts of materials in. Normally, they're getting those materials in for that specific project, that specific property type that's been designed. So it's not easy for factories to cash flow. It's not easy for developers to cash flow, and it is more expensive. We've been building a few houses, and we looked at modern methods of construction, and we just couldn't make the figures stack, even despite cutting the build time down quite substantially. Um,
It is
yeah, I
difficult. I
think
mean, things like vesting certificates do help. Um, for example, when you look at your how do you monitor if a monitoring surveyor is going down, you want to draw down. obviously it's not done on site. For example, if it's
Mm,
something else, then they've got to go to the factory and see, look, have the materials been done, and
yeah,
then you can get vesting certificates to show that. So that's one way around it. But obviously, look, that's a
absolutely.
modular and off-site construction. There's plenty of modern methods of construction that are on-site. So
On site
it's
as
quite a
well, yeah.
broad term, isn't it? That modern method of construction. So
It
I guess
is.
it's going to be dependent on the type, isn't it?
It is, yeah. And it's still very new to the UK building trade. You know, other countries have been doing this for decades on a large scale, and I think yeah, the government do need to find a way of scaling up production, supporting the industry. I mean, funding. Yeah, if you've got the mortgage UK Mortgage Council certificates there, then yes, it does open more doors, but still, generally, lenders are a little bit wary of it, and it's easier to say no than to say yes and do the homework involved. So I don't know if the government could support lenders at one end, offering guarantees on mortgages that are offered on modern methods of construction, and then get money into the factories and the places that are developing these technologies, really support the industry at both ends.
Yeah, yeah, absolutely. So moving on, um, we're seeing in the commercial property world, rents are going well. So not just residential and commercial rents are still going up, but we are seeing net asset values decreasing. And that's really because when investors are still looking at real estate and comparing it as ever to the risk-free rate and other kind of fixed income like assets that they might be looking at. And that is really obviously rents going up is a massive positive, but if your net asset value is come down by 10%, it doesn't really kind of it goes in the opposite direction and you're still at a net loss. Any thoughts on that side of things? What do you think that's going to continue for a bit longer? Do you think actually now that rates are starting to come down, it's gonna kind of push those net asset values or stabilize them, I guess, not probably not increase them. What are your thoughts there?
Yeah, I do. I think mortgage rates have had such a big factor on the commercial property sector. As we see them stabilize, I think, a bit more confidence will come back into the market. It is just there's so many unknowns when you own a property, even if it is commercial on an FRI lease, you're still taking such a greater risk than a gilt, for instance, and so that risk has to be taken into account. I think once people are seeing that commercial mortgage rates have settled, it just brings that whole level of stability back to the market.
Yeah, yeah. The other thing that is, I guess, reducing these values is the fact that everything's based on earnings. So while rents aren't going up, what we've had go up as well is corporation tax. So in distributable earnings, sorry, that was a bit of a mouthful, we're seeing that those are reducing because of things like corporation tax. Again, with home builders, you've got developers, the increased developers tax as well. So
Yeah,
those things are starting to affect those companies' distributable profits and I guess share price really at the end of the day, isn't it? Which is more on the kind of institutional level.
yeah, it really is. I mean, a 5% hit on corp tax, or 6% compared to where we were not so long ago.
Yeah, yeah.
Um, it's yeah, it's a big difference, and
Well,
ultimately,
it's not 5%. Sorry, if you're going from 20% to 25, that's
well,
20%, isn't it?
yeah, yeah, fair point. Yeah, when you look at it as a percentage
Yeah, yeah,
of the tax itself, it's yeah, it's a ludicrous increase, to be honest, when you put it like that. So of course that's going to have a massive impact. And then the developer tax that you mentioned, there's all this money going into putting right the cladding issues from obviously from the rule changes after Grenfell. I mean, as if we're still dealing with that now and only just really getting to grips with it now. I think that's been an absolute calamity. The government should have stepped in, put everything right that needed to be put right, and then, as far as I'm concerned, if the developers had built to building reg standards at the time, they shouldn't be getting punished.
Mm.
And obviously, if they hadn't built to those regs, then fair enough, it's their
Yeah.
liability. But we are where we are, and ultimately, someone's got to pay the bill. And yeah, it's going to see smaller profits for the bigger house builders.
Mm.
They're still doing okay, but with lower production levels, higher costs, higher taxes, it's hard to see too much of a light at the end of the tunnel. It's
Well,
sustaining rather than
well,
growth, and we need growth.
absolutely. It all comes back to what's going to motivate people to build more houses, and these things I don't think are they?
No,
Yeah, yeah.
not
It's
far
hard
from
to
it.
get investment flooding in when when your earnings are going to be coming down, or distributable earnings anyway. Um, so the only other bit of news I've got is the government has just released new information on that thing that landlords love when we get to this time of year, which is addressing damp and mold in the home. And
Okay.
this is, I will put a link to this in the show notes. It's one of those things that the bane of my life seems to be condensation with
Yeah.
tenants, because it is very much kind of about lifestyles and how people are living. And I don't know if you the windows are closed and there's no, you're not letting it ventilate, but the government seems to be putting more and more emphasis on that onto the landlord as well at the moment. So saying that you should have things in place to allow tenants to, well, don't want to put words in the mouth, to live how they want within reason, I guess, and the property should be able to be well ventilated. Now that's all well
Mm.
and good, but if you've got a kind of older property, it's incredibly difficult to do that if people are living in a certain way. So yeah, I'm not sure what you think about that, but especially if you're in a cold and wet country like the UK in the winter, it's
Yeah.
very difficult.
It's infuriating. Your own home, you don't have to hit such sorry, Rod, there's a phone ringing in the background here.
Oh,
So yeah, I mean, these standards are all well and good, but they're hard to hit. I invest quite heavily in Victorian properties that are stone built without a cavity, thick walls, big windows, and traditionally quite difficult to ventilate. So there's only so much I can do, and with the limited budget I've got, it's down to lifestyle. People need to heat their homes best they can, ventilate, and sometimes I feel like we're fighting a bit of a losing battle.
yeah.
Everything's getting pushed onto the private sector. It was like with the EPCs, like you've got to hit an EPCC by 2025. It was just an unrealistic expectation. We have particularly leaky houses in the UK that have been built a long time ago, a lot of them. And it's just like, well, here's what you need to do, but we'll not give you any support in doing it. And um it just seems to me that everything gets pushed onto the private sector, and it's going to push landlords out of the market. It's so difficult to deal with condensation and damp issues. It recurs every single year. You can get one tenant who starts to look after the property in the right way and gets that ventilation happening, but then a change of tenancy and that can go out the window, and you can have the same issue in the same property just because of a lifestyle
I mean,
change.
we found, is it PIV systems, positive ventilation?
Yeah,
I can't remember what the I or E stands for, but they have been quite good.
yeah.
Watch out for there are, I mean, the cost of running them is pennies,
Mm.
but you do see kind of tenants switch them off because they might think, oh, hold on, this is going making a massive difference to my energy bill. It's really not. And the other
Right.
thing that is gets pushed back on is if it's winter and it's bringing in cold air into the property. You can get heated ones, so it warms the air before it brings them in. So I'd recommend, if you are looking at that, go for that one, because you don't want any
Okay.
excuse for the tenant to switch them off. But they have been kind of pretty good. And obviously, look, if you're a landlord, go and inspect it and look at the root cause. If you don't know what the root cause is, it might not be condensation, it might be that it's just water getting into the property. Obviously, at that point, you need to fix it. So get someone in, get a proper surveyor in who understands these issues. If you're not too
Yeah.
sure, yeah. Brilliant. Okay, well, I think that is about it. Simon, as I mentioned right at the beginning, is my business partner. He's the founder of 978 Finance. They specialize in buy-to-let mortgages, commercial mortgages, bridging, and development lending. The reason I've kind of joined Simon is I was just so impressed with him. They've done some really quite complex deals for us, and it's that customer journey. I just felt like I was really well looked after, and he had my best interests at heart. So looking forward to more. So Simon, if people want to speak to you about their mortgage needs or development or bridging finance needs, how should they contact you?
So email's a good one, Simon at 978finance.com, or you can give us a ring on 01524 889 978. You can also check us out on social media. We're always out there somewhere.
Brilliant. Simon, thanks a lot for coming on the show, and hopefully we'll get another one of these in soon.
Yeah, hope so, Rod. Thanks a lot for having me. It's been an absolute pleasure.